this show. This in particular, because this is a good one.
Yes.
We're going to cover the topic of Nerd Alert.
Yes.
Stats and charts. This is our Atlanta Metro MLS statistics. So this takes tens of thousands of home sales across the metro region, and it breaks them down.
May I interject there?
Let me just say,
yes.
Interject a lot, because you know I'm going to run on about these stats.
Okay, I know.
All right. You feel good? Feel caffeinated?
Look good. Caffeinated now.
Smell good?
Only good, feel good.
Cody, I got my notes. Welcome to the Anchored Real Estate Podcast. We're glad you're with us. In this show, we're going to cover all things home and real estate, of course, providing expert advice in the world of home ownership. I'm Johnny Dugan. As always, I'm joined by my co-host, the anchorman himself, Cody Chimbars, a.k.a. Maverick, a.k.a. my brother in Christ.
Amen.
That's right. Cody's a longtime licensed agent and realtor here in Georgia, and most importantly, he's the broker of Anchor Real Estate Advisors. Cody can be found on his socials at Anchorman86 on the Facebook. Again, I'm Johnny Dugan, also a licensed real estate agent and realtor here in Georgia. More about me can be found at Mountain Mansions GA on Facebook and Instagram. We're thrilled to have you with us, and welcome to this show. This in particular, because this is a good one.
Yes.
This show is sponsored by Anchor Real Estate Advisors. Information on Anchor Real Estate Advisors can be found on our socials. There's a little bit of a twist at Anchor Home Advisors.
That's correct.
On the Facebook. But we have lots of information there about not only us, but also a bunch more of our agents, kind of what we do and how we do it. So in today's show, we're going to cover the topic of Nerd Alert.
Yes,
Stats and charts. I saw a ugly sweater the other day. It was all green. It said, "This calls for a spreadsheet." I'm like, oh, that's my love language there now.
Language right there, yeah.
We're going to break down some of this charts and stats. We're going to be showing you, and we're going to be discussing real life, up-to-date MLS statistics on the market. This is what we use to kind of help steer what we're doing and some of the decisions we're making, but perhaps most importantly, how we advise our clients on what the market's doing, what the market is saying from a statistical perspective and from a personal perspective.
Right.
We're going to show you these stats. Hopefully they're not too proprietary, but they're real. So let's jump right into it. And so I have on my computer screen, I'll have this up.
Look at us getting fancy.
Look at that. All right, so we have multimedia now.
We are moving up.
That's
this is episode 8, and we're
That's right.
like we've already leveled up so far.
I know. Delete. All right, so where we started here, this is our Atlanta Metro MLS statistics. So this takes tens of thousands of home sales across the metro region, and it breaks them down. And then what we have here is I've got 4 different lines. One line is for the entire MLS across the board, and then the other 3 lines, blue, green, and yellow, are our most local counties: Forsyth County, Dawson County, Lumpkin County. Okay, and we'll see some differences between them, but generally they all tend to trend the same kind of way. And then we're just going to break down a couple of things. Again, this just gives us a window into what what the market is doing overall. So what is on the screen right now, and you can see this is the last 3 years of average sales. So down here tells me what data is being shown. So this is the average sale price. So if you're looking at that, and we would tell you this, the market's been relatively flat, although still trending upwards. So I know when you do your monthly stats, you're generally saying, hey, year over year, this is up 1%. Year over year, this is up 0.5%. And that's, different metrics, but that's what we're looking at here. I think what we're going to end up doing today, and I'm prepared, is we're going to squash and just move on from the whole crash talk. Yeah. The market's flattened out. It's really returned to a pretty normal market. And we're 4 to 5 years in, so the COVID thing and the bounce and the pending doom associated with it, we're pretty much past that, and we're going to show that. But what this shows is the last 3 years of home sale price But another thing we can do is we can back out. So these lines get a little squiggly for the local counties because they're smaller and sometimes they can get skewed. But if we look at this data, we can see from 2012, just a steady progression of sale price. And then we get this significant rise between 2020 and 2022, and then it flattens out again.
Mm-hmm.
We recognize that these years from 2012 to 2019 was a good market. Solid, nothing crazy, but good, strong market here in the area. And so I like to go to some of that historical data to say, what did a normal market look like? And then compare that to what's happening now and say, hey, when everything was a normal market and everybody seemed happy with how the market was going, how does that compare to now? And then how does that help predict what the next 3 to 5 years will look like?
Mm-hmm.
One big thing is we know that what we saw in these 2020 to 2022 years is very unlikely to happen again. So it's, what does a normal market look like? So I'm going to go from sales price, which we see creeping up and then relatively flat in the last couple of years. But if 2012 through 2019, if you just maintain that straight line without the big spike in 2021, 22, we're getting back to where that line just would have been, just
Natural.
A steady, natural progression.
Yep.
Right. And that's why we're often going to say, we're just getting back to a normal market.
Correct.
And which is kind of where we like to be as realtors. For the folks considering a purchase or a sale, there's a couple things I wanted to show here. Month supply is one we hear about a lot.
Yeah.
And this is supposed to be a big driver of what the market is. Currently, the month supply, these are all pretty close, 4.5 to 5.7. So a 1 month variance between all the counties in the entire metro. So we're talking 4.5 months to 5 months of inventory. The real estate market considers what to be a normal market? Just a flat market. 6 months is just an average market. Nobody has the built-in leverage.
Yeah.
If we go back, 2021, this inventory was so low, and that's why prices were so nuts. So because there were, you had all these people with low interest rate opportunities wanting to buy a home, but there's only 3 homes to buy. So you got 10 people elbow fighting out front to get that one, and that's why you had all these multiple bids. But if we look back historically, what did a normal market look like? Our inventory hasn't gotten back to even 2018, 2019, when this was a bullish market. Our inventory has not reached back up to that point when it was a good market. So no sky is falling. We're getting back to kind of a normal market where we have some inventory, which is good. It's good. Well, it's bad a little, obviously, when you've got no inventory and people are auctioning your house off effectively. Right. That's good for sellers, kind of. But it's all relative, right?
Correct.
If you're selling, now it's already trying to buy.
Right.
And that's one thing we always try to preach in this world is that it's going to be a little bit better or a little bit worse for either the buyer or seller. You act accordingly, but it's all relative. Mm-hmm. So it's kind of keeping all that in account. But what we wanted to show is, historically speaking, this is still a tight inventory market overall. Again, I'm not trying to get anybody to buy or sell accordingly. I'm just saying, just letting everybody understand what the market looks like. Another one,
May I interject there?
Let me just say,
yes.
Interject a lot because I'm going to run on about these stats.
Okay, I know. If you can't tell, he is our data guy here at the brokerage, and he'll do a monthly report for us, and he gets nitty gritty. Yeah. But I think like what we're seeing in the field, right? Like data is one thing, and we see the month supply, and we understand that. And I think as you've been watching our channel for 8 episodes, you hear that we're realists and we point to the data. But then there are homes that are going under contract in a weekend still, right? And so how do you balance those type of homes, right? Because I would consider those an outlier. Mm-hmm. Or you're working with a brokerage that historically prices things way below market in order to deliver an eBay-like effect. Right. The last 60 seconds of an open bid on eBay. And then they like to tout their stats, and then we got our sellers this much more money. You can find them on billboards.
Yeah, right.
So, but I think, at the end of the day, we're in this market where we have to change all parties' perspectives. Like if you're a realtor or you're a real estate agent in this market, you understand, first and foremost, especially if you're doing this full time, that if houses aren't priced right, they're not moving.
That's right.
And I could host an open house. I could host a broker open house. I could throw $1,000 at marketing it. But if it's not priced right, it's not going to move.
Right.
And then on the flip side, we've got to have these buyers with the perspective of, for so long, they were beat down and they could not come in and negotiate. They could not come in and ask for closing costs. And now they're able to, because the sellers that want to sell, they're following the market, right? Like I've got a listing right now that is a little further north, and they're still priced too high for what the county will allow, essentially.
Yeah.
And we're competing against new construction that's $30,000 less than their house, but they cannot go down any lower because they have to achieve their goal to build their new house. And so we're in a holding pattern.
Right.
Like I could do an open house every weekend, but I'm not going to be able to move that property at the current list price that it's at.
That's right.
And so, we have to educate the consumers. And ultimately that's why we created this podcast.
So there's what we've talked about recently is what we see out of buyers is one, they feel like because prices shot up that they're paying a premium price for all real estate. That's one thing. Yeah. And also because interest rates were low, the buyers feel like they're paying the high price and they're paying the high interest rate on top of each other. Yeah. So they feel like they're getting double gut punched. So what's that put in the mind of the buyer? They want one of two things. They want either a perfect house. Perfect. It's got to be perfect. Nice hotel in Vegas, perfect. Or it's got to be a deal. Yes. I'm putting a deal in the air quotes because it could be a perceived deal, or it could be the seller, seller kind of gets their price, but they kick back some, money for closing and towards, maybe an interest rate buy down. But there's got to be a real financial incentive to the buyer in order to move forward. So it's either got to be perfect or it's got to be a deal. Yep. So the idea, you're like, hey, my house, it's not perfect, but it's decent, and I'm going to expect to get, sell it in the first weekend because that's what the market is. That's not true. Yeah. And buyers are really particular right now, super picky. Yeah. And the data reflects that in one way, and that is, I'm going to show this one here. Percentage of original list price. This is one of my favorites, and it's one of the hardest for sellers to kind of wrap their head around. So this goes back 10 years. So in a normal, like I said, in a normal market, it was mid 90s percentage, but I'm going to make this a little bit shorter so we can see it a little bit better. Entire MLS and all the counties are agreeing here. On the average, buyers are giving up 3.5% to 4.5% off their original list price. Sellers. I say buyers. Yeah. Thank you.
Sellers. Yeah.
Sellers are giving up 4.5% to 5.5% off their original list price. What's that tell you? Buyers are being super picky, and they need some financial incentive. Now, there's a really good chance that I bought my house for $290, and I'm trying to sell it for $5. And the buyer wants to get it for, we'll say, net $475. Well, I have a huge equity increase. And yes, we're not trying to tell sellers to give it away. But according to the data and according to what we hear from buyers is, if I'm going to buy, I need a good incentive to do so. Yep. And this is a good one where you can see on that chart the last 3 years where the percentage of original list price has steadily dipped and dipped. That's somewhat contrary to the sale price. The sale price is actually up a little bit, but what the house sells for compared to what it was originally listed for is off. That means if you're $500,000, a relatively medium priced home, you're coming off $25,000.
Right. And could be potentially offering closing costs.
And there. Right. And because that number
compensation.
That number actually doesn't take that into account.
Right.
And so what we're saying is if you want top dollar for your home, it better be perfect. Yeah. That's all I can tell you. It better be perfect or be prepared to sit.
Yes.
And that's okay too if you don't mind sitting. I've got a house in my neighborhood. They've been overpriced. It's been listed for 3 years. Beautiful home. And I've talked to the seller. And you said, when I get my price, I'll sell it. Okay, that's totally fine. If that's your strategy, you go, hey, when I get my price, then like you said, I can meet my goal.
Yeah.
To move forward to the next thing. That's fine. But my advice is, if you actually want to sell it because you need to sell it, or you're looking at your next dream home, or whatever your motivation is to move, if you're actually trying to sell it, these stats tell you buyers are looking for either a deal or it's got to be perfect. You have to do the updates, you got to do the cleaning, you got to do the staging and all the things.
Yeah.
It's the sellers have to put in a little bit more effort now than they did over the last 2-3 years.
That's right.
That's just
That's right.
how it is. And to your point, I can market the heck out of it. And I will get people through your home, and we'll look at their feedback, and I'll look at the data. And then, like I said, I just sold a home in my record pace last month. It means, to your point, it can be done with a properly priced home. Again, I didn't give it away, priced it right. But if it's a little bit over, it will sit.
It will sit.
I promise.
Yeah. We're seeing it.
That's it.
Every day.
Yep.
I mean, and then sellers are getting upset at us, blaming us. And then outside agents, which they're not supposed to, especially if they're realtors, they're coming in and saying, well, I've got this buyer and I've got this, and this is my marketing plan. And it's kind of a Wild West right now.
Yeah. We saw that live with one of our agents.
We did.
Yep.
We did. A couple of times, actually. And but the reality is, we are doing everything that we can in this market.
Right.
And the agents that are going to withstand and weather this market are going to come out, and they'll be the top agents.
That's right.
In the next 3 to 5 years.
Yeah.
Because right now they're being prepared, and a lot of agents are dropping out. They're like not meant to be in real estate, or they're getting second jobs, or full-time job, and all of a sudden real estate's part-time. But you've got to be patient with your agent. Now there are agents out there, especially, and I'm not knocking part-time agents. I used to be a part-time agent. I had to. But, part-time agents that are not fully invested into the real estate world, into the data. I mean, if you're not familiar with the real estate process and how the market is, you're doing yourself a disservice. I'm not telling, if you're watching this and you've got a seller, or a listing agent, and you feel like they're not doing their job, first have a conversation with them, right? And give them an opportunity to show you what they have been doing in the behind the scenes. Because I can't tell you, Johnny, I've had at least 4 people reach out to me, home actively listed. And they said, Cody, can you help? I said, there's nothing I can do that your agent's not doing.
Right.
Now, if I were not who I was, I'd be like, yeah, I can do it.
Of course I can.
But I mean, that gives you a tell of how the market is right now. And it's real.
Yeah, I do appreciate it being a little harder. I do appreciate bringing out the best. The competitive part in either of us is going to say, well, if I got to dig deeper to get this house sold, that's what I'm going to do. I'm going to learn a new skill in the process. But at the same time, it's just a different market than the last 3 to 5 years. Just flat out different. The data shows you. You can listen to me banter about it, but the data really shows that off. I want to show one other stat here before we go, and that is closed sales. And I'm going to concentrate on the black line because that has the most data. That's the entire FMLS area. I'm going to max this out. All right. So we refer to this as the market heartbeat. This is total units sold. So regardless of value and time on market and all that stuff, this is just the number of homes sold. I really like it. I like how it points us. But obviously we had this huge peak when the interest rates were amazing. And then we've had this really interesting drop off. Now, I showed you the chart earlier that showed the values aren't coming down, but the numbers of units sold is way down. So October of 2025, across the Atlanta metro area, we had, 5,500 homes sold. Okay? I have to go all the way back to October of 2014. Yeah. Where there was 57 home sales. So year over year, 2014, a decade plus, was the last time we had this few of homes sold in October.
Yep.
And that goes, it doesn't stand to reason. So This chart here, thank you, ChatGPT, is the population growth of the Atlanta metro area over the last 10 years. So we see this growth. The northern counties are even faster. So like Dawson County is one of the fastest growing counties percentage-wise in the country. We know that people are kind of pushing north, as things get more and more populated. But the point is, population growth, for people aren't fleeing the Atlanta metro area. So then, if that's the case, if less homes are being sold, but the population's soaring, then that tells you there's a lot of people ready to make a move.
Yeah. Pent up demand.
What we call pent up demand.
Getting
Episode
off
2,
the fence.
go back. Yep. Yeah. In episode 2, I went like this and showed charts like this.
Yep.
But that's the real data.
Yes.
The population's going one way, the number of homes sold's going the other way. They're counterintuitive, and ultimately they're unsustainable. Either people need to move away, or people will break loose. The pent up demand will break loose, and the homes will begin to sell at a higher clip. And what's that going to do to values? It's not going to make them fall, right? And so again, I'm trying to show data and trying to show kind of what the current market looks like. At the same time, we always have an undercurrent of where we are from a stabilization perspective. Like I said, I'm going to squash the whole crash thing. I think we're past it and beyond the discussion. But when we talk about should I make a move now or relatively soon, there's nothing in the market, nothing in the data that shows you're going to lose out. Except for if you're like, I'm waiting for interest rates to drop. They're not going to drop that far. And everything about pent-up demand tells me you want to save the $60 a month with a slightly lower interest rate, but that house is going up $15,000, $20,000. So are you saving? Again, I don't like to push people, but the stats just kind of bear out. If you're ready to move and you can afford it, there's no time like the present. Right. And that's just a real statistically based analysis of it.
Yeah. Well, and you nailed it. And the reality is the longer you wait, right? And you might be in that position. And we've talked about this multiple times. I think episode 3, right? Like we're not ever promoting you to go out and put yourself in debt, right? And that you can't sustain.
Right.
But even if, right, Johnny, even if the market crashed, okay, so let's go the opposite way. I don't believe it is.
Yeah.
But even if it did, and you bought today, look at the cycle.
Yeah.
You've got the data on the screen.
Yeah.
Look at the cycle.
Yeah.
You're not going to be able to sell it in 2 years.
Right.
You might have to sit on it for 7 or 8 or 10 years.
Yeah.
But the market will come back.
That's right.
So at the end of the day, and to your point, where you're waiting for the interest rate, so is everyone else.
That's it.
And you're
pent up demand equals when the market eases either prices or interest rate.
Yep.
You got a whole bunch of pent up people that one chart going up and the other chart going down. What's in between is the pent up demand.
Right.
And those people are just kind of, they're hovering,
yes,
ready to swoop in when something eases up.
Right. And in the next episode,
yes,
we're going to talk about how investors and why investors are still purchasing.
That's right.
Even in this market, even with interest rates.
Yeah, that's a good point. If the investors are doing it, just do a little follow-up on it. Just like, hey, I want to do a good investment. Let me see what Warren Buffett's been doing the last few weeks.
Yeah.
That can help kind of steer where things might be going with the market. So, yes, stay tuned for that.
Yes.
Thank you for staying in here. Like, subscribe. Please ask questions. If you want more data, we've got more data. I am the local data nerd here, so I'm always happy to talk about it. Otherwise, like and subscribe. God bless. We love you. You are loved.